looks like 150,000 jobs were added during the month of October. Reading into some of the other data here as we're getting the change in non-farm payrolls coming in, that headline figure, as we mentioned, 150,000. And then additionally here, taking a look at the unemployment rate, that ticks higher to 3.9%. Average hourly earnings month over month, that was up by about 0.2%. Average hourly earnings year over year, that figure hotter than expected. It was up by about 4.1% here. You're taking a look at the futures once again here on your screen. We've seen a little bit of the movement. We were mixed. Now all three major averages here in the U.S. are in positive territory. Fractionally as it may be, we're seeing gains of about 0.3% on the Dow, about 0.25% on the S&P 500, and about 0.1% on the NASDAQ right now, too.
Yeah, obviously watching bond yields really closely on the back of any reaction to this as well as we look at the 10-year here. We have seen it really pull back this week, by the way. It is at 4.5% roughly. The shorter end of the curve, we're seeing 3-year at 4.69. And the 7-year, or the 5-year, I should point out, at 4.5%.
I've also got to look at some of the sectors. You guys know I love talking about sectors. The job gains occurred in healthcare, government, and social assistance. Those were the drivers here. But employment did decline in manufacturing due to strike activity. That noted within the first stanza of this report. So there was that question of how much strikes would actually impact this figure. Seems as it did. It came in lower than expected here. And ultimately, a bit more of the data we're going to be able to dive into here just within the next few minutes. The labor force participation rate, though, that is at 62.7%. That was a slight tick higher from the last report as well.